Good morning, traders. It is Wednesday, the 13th of July, 2022. It's 8 a.m. here in Chicago. Thanks for joining me for episode number 2271. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for the sound check. Wow, the US CPI number comes in real hot, not as hot as the rumors from yesterday, which were attributed to that big drop in the afternoon. But the prices are moving lower as the bonds move over $1 in the futures, and the short end of the curve pricing in larger rate hikes now. So U.S. inflation hits a 40-year high at 9.1%, 9.1%. So the Fed's very furious rate of rate increases shall continue, it looks like. The only thing I see that's holding up okay is oil, and everything else got hit this morning. We are in a strong risk-off sentiment environment, although we've recovered a little bit, but not very much. As far as key earnings, we got Delta Airlines this morning. Delta Airlines missed quite a bit. Came in at $1.44 versus $1.64, missed by 12.2% on higher revenue. So you can see there that maybe they're getting hit with energy costs, higher labor costs maybe, but they made more money and lost a lot more. They beat, again, revenue beat by 3.16%, but the earnings missed by 12.2%. Other than that, we're looking at a calendar here that is showing that it was a very busy night. Great Britain releases GDP month on month for May, came in quite strong, 0.5% versus negative 0.1 expected. Industrial production also came in very strong out of Great Britain, 1.4% versus negative 0.3. Construction output, again, much stronger than expected, 4.8% versus 2.5. China released its balanced trade number. This is a high-tiered number, absolutely blowing the doors off. Expected at 76 billion surplus, came in at 97.94 billion. Just China raking it in there. Eurozone industrial production also beat at 0.8% versus 0%. And then comes the inflation rate year on year out of the U.S., which came in at 9.1%. The prior is 8.6%. The expectation is 8.8%. So it was expected to tick higher, but it ticked a lot higher than higher. Core inflation came in at 5.9%. The prior is 6%. So it actually ticked down. The expectation, however, is 5.8%. So month on month, by the way, is the one that's watched more closely by the Fed, 1.3% versus 1.1. This is what's feeding into that. And the PCE index. PCE index are the key things that that feeds into the Fed's decision-making model. At 10 a.m., we have Bank of Canada's interest rate decision expecting to raise by 75 basis points, 225 basis points, or 2.25%. And then they released their monetary policy report. We get the crude oil and gasoline inventories at 10:30. Monthly budget statement at 2 out of the U.S., expecting a deficit of $70 billion. And then the unemployment rate out of Australia at 9:30 p.m., expecting 3.9% in line with the prior month. And that wraps up the day. Very busy day. Again, U.S. CPI comes in real hot, causing basically a range of 121 points on that number. 121 points in the S&P. Outstanding range. It's in the third. It's almost in the third standard deviation category from the mode of 252 sessions or 1 year. So in the last year, this overnight session exceeded approximately 95% of all days. The overnight inventory in the S&P is 22% short. The volume 378,000, also outstanding. And most of that went off at 37.60, I think. No, it didn't. But that's where we are. The point of control, which is incredibly artificial, by the way, for those of you watching the S&P, you might notice that 3760's got the point of control overnight because it traded so much. There was a massive, massive iceberg that absorbed approximately $1 billion at one price in the ES. You don't see that often, that the ES is absorbed. Thanks for telling me about the title there. I did botch that up. Fixed now if you refresh. To take $1 billion at one price in the ES, this is outstanding. So that's where we are. So we've shifted everything down. The real point of control here is around 38.28 or so for the S&P. The SOC, or the scene of the crime, or the point at which the number was released today, that SOC is approximately 38.43. That's the SOC. Of course, the SOC is not marked because we actually shot up to 38.73. We shot straight up to 38.73, and then we dropped right through. So we did tag the SOC immediately, and so I'm not marking it separately in our master levels and cloud levels. So that's what we have. We've really tremendously shifted prices down. Here's what was expected yesterday. I was expecting the market to be responsive up into the 56, 57 area. Then I was expecting it to push through this 38.36 and make a run for 38.10 yesterday. That's the primary scenario. Here's what actually took place yesterday. Let's take a look. This is what took place yesterday. Yesterday we opened and we shot straight up in what was a drive that got us up into yesterday's high, which was 38.7650. So we exceeded that 56.57 area by quite a bit, by about 20 points. And then we fell back through the 56 area, fell back through, tested from below, consolidated, broke above, held the 56 area or so from above, tried to make another high, poked the high, and had a one-tick failed auction. And then we got the CPI rumor right here that pushed us straight down, giving us a string of single prints. The single prints are from 38.3975, 38.3975. That was the IB low, basically, down into 38.26. Really, it was 38.40 to 38.26. That was the key area to watch today, and we went through it this morning. We just banged right through it here. See how it held overnight right there. We pushed through it back to almost yesterday's high, and then we fell right through, and we're still near the lows. So that's your overnight profile. We have a distribution that is logical, that is orderly. Then we have a second distribution with a ridiculous point of control at 37.60, all traded at one price in the lower segment. So what we have is a very clear zone here to use as our immediate over underline. That zone is between 38.05 into, well, let me tell you the levels. 38.05 into 38.18. This zone here, 05 to 18, is the current unauctioned area, and that's the line in the sand, or the zone in the sand for the session. So we want to see Does it come back and recover and retest this area? In either case, I'm going to be looking for shorts on the way up. After, I want to emphasize, after it fails to continue. Okay, so I'm not going to try to pick a top. Top pickers get bloody noses, as they say in the pit. So it's got to show me that it's unable to continue. And notice, most of all, that we are back. We're back, baby. We're back at that 37.75, which is marked as the magnet in our ES cloud levels. This is the key magnet, is the key MC point of control in this region. And when I scooch back so that I can bring in the data here, if we go back, you'll see that it is the point of control right there. So we've moved from the upper distribution right here. We created a secondary distribution with that 56 area being key. We have, yesterday we had 2 overlapping points of control. Then we created another distribution, another high volume node at 38.25. And now we're back at 37.75, right? So this is where we are now. As we trade here, let's get rid of the extended data. This should reset and get rid of the extended data. In the meantime, let's look at the TPO chart. Here's the TPO chart. We're in this crazy zone here, this 39.60 down to 37.12. 39.60, 37.12. That's where we are. Where did we get to this evening? 37.52 was the turning point. 37.60 was the big area that was traded overnight. So we are just completely imbalanced. Despite all this bad news, what this is doing, just so you don't lose sight of the bigger picture, you know, as much as there's a lot of bad news out there, what we're doing is we are simply ping-ponging in this range. So we're just going to likely continue to ping-pong in this range unless we breach the 37.12. The market is actually in balance. Despite the news, despite the, you know, the thing that might tip us over here is the start of the earnings seasons with banks tomorrow, JP Morgan. And that may push us around, but it's at this juncture, a lot of stuff is already baked in. A lot of stuff is already baked in, and we are simply just going back and forth within this range. Here's the chart with the day session only. So we have a very, very clear, gosh, this is so beautiful how the market has organized. So what you have is balance and the neckline, balance and the neckline, balance and the neckline. Here's a neckline right here. We're below at 3,800. Then you have the big kahuna at 37.75, which is where we are now. And then we have another neckline at that 37.30, 37.30 down here. Remember, the low is at 52 this morning. And then that brings us into 36.75, right? So we have 38. The next balance area is 38.25. The next balance area here is 38.56. So we've gone from yesterday, a couple of days ago, we went from balance up here at 39.04 to imbalance, getting below the 38.80, 76 or so. Then we go and trade Monday, trade this, put in this balance profile. We build this 38.56. Then yesterday, we built the 38.56.57 again. 38.56.57. We have the same point of control these 2 days. Yesterday and the day before had the exact same point of control. And then what we did is we broke through. This is imbalance. We broke through and then we closed. Look at where we closed. We settled at 38.23. We settled right on top of the balance in the middle here. And then this morning we busted through. Remember, I told you that the number came out at 38.43, which is right here, and it went and tested the 38.40 low volume node, came back, pushed right through, and it came all the way down to 50 something, 52, and now it's holding steady in this balance zone. So we've traversed. So these become clear support resistance areas in between these. So what I'm doing here with this profile is I'm showing everything that's on this chart. It's picking up everything that's on this chart. You'll see the profile adjust as I remove things or add things. But I'm only interested in the profile from the low. So I'm looking at the 2 balance days from the low all the way to where we are now to get the narrative. So the profile goes back to June 16th. June 16th is the first day of balance at the low, and that forms our 36.75 balance to 37.30. Really, it's 37.12 all the way into 37.36, but let's call it 30 right here. And we are here. So the question is for today, let's clean that up and zoom in. The question is for today, so we have the low at 38.10. We're trading at 37.73. We've got an overnight low at 52. The question is, do we get responsive? The market is out of balance. We're opening out of range in balance of the bigger picture, out of balance of yesterday. So referring back to yesterday, we're out of balance. We're not in yesterday's range. Referring to the bigger picture, which is where most traders forget to look, we are in balance, 37.75, right? Just as explained over the last 5 minutes or so. So the question is this. The question is, do participants come in and take profits if they're short, therefore they buy, or they see dislocation in price being too cheap for the current environment and start to buy? Do we get responsive? In other words, do we get responsive from the open and start pushing higher? If we do, we've got to start looking at the 3800 because that's one of the dividing lines, right? That's one of the areas we talked about, 3800 right there. See this neckline? So that becomes the key test area. You could see how we had a couple lows right there. Low volume node, low volume node, low volume node, right? We've kind of skipped through this area, and then we held 3810 yesterday, and that gives you, now we see how this 3800 was formed, even though it's a century figure, 3800, the 800 being century. Even though it's a 3800 century figure, the profile shows that it's an what's the word? Oh my God, I'm drawing. It's an unfair price. It's an unfair price. So any push to the buy side is likely to target this 3800 here. That's where we're likely to go and check things out at the 3800. I expect the 3800 to get rejected back into balance, and then I expect it to go and poke the 52. Why do I expect it to poke the 52? Can anybody answer? Why do I expect it to poke the 52 after it tests higher? It has to do with statistics. Come on, come on, come on. We don't have all day for answers. Why would I expect some test of 52 if it rejects 3800? Why would I target the 52? That's your overnight stat. That's the overnight stat. That's that 96 or 94 or 93% historical probability of getting tagged during the day. I have a very high probability of touching the overnight. High or low? Where's the overnight high? Where's the overnight high? 38.73. What's the likelihood that it'll get way up here versus 38.52? Less likely, although they have an equal chance today, right? So any failure on the buy side, and that failure could occur at 37.90 or so. 37.90. The stock zone could happen at 3800, could happen at 3810, could even push and have a gap to settle at 3823. If it fails and rolls over, the 52 becomes the key price. Now, the range is incredibly wide, 121, historically wide. So yeah, maybe it won't, but that's not how statistics work. We're looking at a growth statistic for all days. We're not looking at statistics when the range is blah, blah, blah. So we'll see what happens here. That's the key plan. If we don't sell off, if we open and immediately sell off because there are prices, there are participants who need to now adjust their risk profile on their equities, then we are likely to target this week low at 37.40, and that puts us at last week's low. Last week's low, the prior week's low is 41.25. Right there, right there. This is likely to flush hard. So if it takes out the 41 quarter, I'm looking for the 37.12 double top from back here. This is a double top right here. This becomes the big target of today is 41. That's the big one, okay? And that pushes us out of this upper balance and starts us on this unfair price range down to 37.12. And if we don't hold the 37.12, now remember, we already have a ridiculous amount of range. If we don't hold the 37.12, then 36.75 becomes the next target over the next day or so. And then now we're in the lower distribution, and now we've rejected the 39 range. We've rejected the 3,800 range, 3,900 range, the 3,800 range, and we've moved out of the 3,700 range, and we are likely to seek more stable buyers by pushing lower, and there's some key levels down below. That's how things are laid out currently. So very important to see if this morning we get an open, responsive drive towards yesterday's auction, away from balance, or we open and we get an initiative drive. And if we get an initiative drive, then 52 becomes a target on any pullback to sell, and then 41 becomes the target. So very clear. What I'm going to say is, I'm going to remind you that derivatives trading is not suitable for all investors. These are not trade recommendations. But what we have here are very clear risk-reward opportunities. We don't have that often, especially not in the summer trading months. Okay? I won't go any further. Good luck today. I will catch you tomorrow morning. Mind your risk. Without minding your risk, you're just gambling, and you're not likely to continue to play this game with us. Good luck.